Hey everyone, Anthony Gerbi here with Stein Financial Group with another edition of Thursday Thoughts. If you haven't already, by the way, please subscribe to our YouTube channel so you don't miss any of the future Thursday Thoughts that I'll do. And we are continuing this week with our ABCs of finance. And this week, the letter is T for tax. I feel like that's how I should say it. It should be almost dark and scary in this children's book. There are obviously a lot of ways I could go talking about taxes, but in my quick Thursday Thoughts format, I actually want to talk about one of the most common misunderstandings about taxes in the United States, specifically income tax brackets and how they work. All right? It's actually not how a lot of people think they work, where if you make a certain dollar amount, well, now I'm paying a brand new tax rate. Here is how tax brackets work. In the United States, when you earn your first dollar, it is taxed in the first tax bracket, the lowest tax bracket. And every dollar that fits within the threshold of that bracket, which is up to about $10,000 depending on the year, gets taxed at the rate of the first bracket, 10% as of the time of recording this. The next dollar over that amount gets taxed in the next bracket, the 12%. But going over that first tax bracket does not, I repeat, does not mean that now the entire tax bill is in the 12% tax bracket. Let me give you an example. Let's use round numbers, and let's say I made $15,000 in a year. The first roughly $10,000 is going to be taxed at 10%. That's the first cutoff to the bracket. It's just under $10,000 in income. The next $5,000 would be taxed at 12%. Notice not the entire $15,000 will be taxed at 12% because I made it into the 12% bracket. No, only the $5,000 that is in that 12% bracket is actually taxed at 12%. This creates something that's called an effective tax rate. This is what you should actually care about, by the way. Your effective tax rate is the weighted average of the taxes you pay in each different bracket. So you paid 10% on the first $10,000, and I made another $5,000, so now I'm paying 12% on the next $5,000, but really my effective tax rate, the actual average, is more like 10.5% because the majority of my income was in the 10% bracket. Apply this to higher incomes and more brackets where it goes up to the 22% bracket, the 24% bracket, 28%, and those brackets may change in the future. But that is the way our system works. The more money you make, the more taxes you pay. But that first $10,000 for every single person in the United States is always taxed at 10%. So I hope that illustration made it clear. It can be kind of a tricky conversation to talk about, but that's one of the most common misconceptions about taxes. And I think everyone would do well to remind themselves that just because I'm in the 22% bracket doesn't mean I'm paying 22% in taxes on every dollar I've earned.